All right, guys, we're live here with Sam and Arthur of BitMEX. They're going to go over. We have a number of things we're going to discuss today. We're going to do an extensive deep dive into their new BVOL Volatility futures contract. We're going to look at some of their user interface concerns and commentary, as well as the heated debate between assuming central counterparty risk or the socialized margin loss system that's been going on. So we got our panel assembled here. Flibber as co-host, me, BTC Vix, Bitcoin Bravo. You can find us all over at the TeamSpeak Whale Club channel. I'll put that in the show notes. So we want to kick it off like we usually do, giving kind of an intro to, BitMEX, the guys over there, Arthur and Sam, and how they came about founding BitMEX and the origins of that. So I'll start with you, Arthur. Why don't you, present your background a little bit with us and take us through how you got here today?
Yeah, so I was a finance major in university, came out in 2008, and then started working for Deutsche Bank in Hong Kong on the market making desk for ETFs. So I was one of the first traders for their own bank branded ETF brand called DBX Trackers, and we listed about over 100 ETFs in Hong Kong and Singapore, and I was a head market maker over there. I worked there for about 3 years, and then I moved over to Citibank as a head market maker for their Asia, ex-Japan, Australia ETFs as well. And so did some of the biggest iShares and other Chinese fund managers listings in Hong Kong and Singapore, and in addition did some proprietary trading with China, Korea, Taiwan, index arbitrage on futures contracts, and then a lot of non-deliverable foreign exchange trading as well. And then May of 2013, got a pink slip from the bank and started trading Bitcoin. And then about 9 months later, decided that I wanted to start a derivatives exchange and found my co-founders, and we started BitMEX. I'll give a little bit more history about the idea behind it, but I'll let Sam give an intro to his background as well.
Yeah, my name's Sam. I was living in Hong Kong at the time. I met Arthur working for a startup that did web crawling and copyright action. So I don't come from a background, but I come from a web tech background. I was doing a presentation actually with a couple of guys about getting jobs in web development, and Arthur is pretty funny. He asked me a couple of questions what it would take to get a tech co-founder who was willing to work without pay. And I said, oh yeah, you have to find some ad who really believes in your company. You can get anybody to do that. It was me. The idea I'd been wanting to exchange for a long time. Everything he had in mind, and really wanted to deliver to the market a serious exchange for serious traders that does the basics, which isn't difficult to find in this arena. So in June, promoted this from a side job to my thing, and operating on it just nonstop. It's been a lot of fun so far.
And just to come in there so we can get some clarity, because I imagine one of the big questions that some people on the other side are asking is, what really differentiates yourself from the competitors out there?
So I think the first thing is that we're laser focused on only one thing. We only want to do derivatives. So we're not trying to be an all-in-one exchange that does payment processing, fiat to Bitcoin, some derivative types, and all sorts of other services. We excel at building derivatives technology for Bitcoin, risk management, and providing professional level products to people in the derivatives marketplace. And I think that's our number one differentiating factor as a firm for BitMEX.
Yeah, I definitely take that into account when I look at an exchange because I feel like it's very important that they're utilizing their human capital and their resources to what's important to me and my focus, which is trading. So, like you say, there's other exchanges they do, they want to do an ATM into their exchange or something like that. To me that always signifies they're not as serious about the trading platform. So I'm really glad that you guys clarified that aspect of it. So now we'll just pivot into kind of the main event, which is your recent release of your BVOL product. And you said that it's been live for a little bit over 6 hours. But can you give us an overview to somebody that's probably just new to futures for the first time within the last couple months of what a volatility index is and how it becomes a tradable product on your platform?
Okay, sure. So basically, volatility is the standard deviation of the movement in price. So how much Bitcoin moves either up or down, the intensity of that is the volatility. What we want to capture as with this product is to allow investors and traders to just trade volatility without having to be trading the Bitcoin exchange rate. So when you trade volatility, you don't have to have a view as to which direction the market goes. You just have to have a view as to how much it is going to move. So that could be an event risk sort of situation. Maybe there is an announcement by a regulator about a certain piece of legislation that would be related to Bitcoin. Instead of thinking, okay, is this going to be a positive or negative effect on the price, why don't I just trade the volatility? I think it's going to increase the gyrations in the market, and I can make positive profit in that respect without calling the market. And then basically what we've tried to do is make it a little bit simpler. So in the regular fiat and financial markets, you have something called the VIX index, which is basically taking the implied volatility backed out using a formula called Black-Scholes from options prices on major equity indices. We wanted to make it a little bit more accessible, so we just used the historical volatility of Bitcoin as observed on Bitfinex. And what we've done is we've taken a 2-hour window every day, and we've looked at the time-weighted average price at 1-minute intervals over that time span, and that is the index, the raw data for each day's print. You then basically take the percentage move day on day and take a look at the 30-day standard deviation in that price. And then you just annualize that number to get it to a more tradable, friendly number. Rather than it's like 2% or something, it's what you see here is like 50% or 40%, something like that. And basically, what this futures contract does is lets people bet as to, for example, the one that we've just listed expires in end of February. At the end of February, what do I think the previous 30 days volatility of Bitcoin will be? And either you can go long or you can go short on that value, and you basically make the difference between where you entered and where you exited. And we margin this in Bitcoin. So you make 0.01 Bitcoin for every percentage point move in the realized volatility. So it makes it kind of just like a straight bet and quite easy to understand from that perspective. The VIX futures that you would probably find on some of the other exchanges, CBOE or whatnot, it's a little bit more complicated than what we're offering.
Yeah, and maybe you can see my screen right now. I took this screenshot just of the recent price action. I was joking earlier that it would have been really interesting if you had launched these historical volatility, the BVOL product, the volatility futures, just a week ago when we were in this B band, the Bollinger Band tightening, and I've kind of highlighted here just a kind of an example. I haven't really looked, like you said, you've only had the product trading live now for 6 hours, and I was sleeping because I've been trying to catch up on sleep after all this market action. So I just put this screenshot together to show some people that can grasp it a little bit more visually, that we had this Bollinger Band tightening. We didn't know which way the market was going to break, but you could have took a position in historical volatility in a futures product like you guys are releasing, and you could have capitalized on that. This one in particular, rose from 6 to 30 during this massive downward draft. So just to kind of move into that, and then you were saying that you were calculating it on a minute-to-minute basis then?
No, so basically, we need to choose a time every day that we snap the Bitcoin price. So instead of just saying at 12 GMT every day, we're going to look at the last price on Bitfinex or whatever exchange and use that as the price for the index. We're going to take a 2-hour average price, so that's less susceptible to manipulation. And you basically take the day-on-day change from these time-weighted average prices, and that feeds into the historical volatility index.
Okay, and then now can you explain to me how you're managing risk on this product specifically with limit up, limit down? I know a lot of people are not familiar with limit up, limit down that are coming from the active retail community in Bitcoin because they're used to the socialized loss system. But how does that work during periods that we just saw in the market where things got wild and crazy? How would that play out with the BVOL product?
So BVOL, like all of our other products, has a limit up and limit down threshold. Basically, what we do is we look at the volatility of whatever the underlying index or exchange rate that we're trading, and we think about, okay, what move do we think is likely to happen in, say, the next 8 hours, and we sort of model how much we should allow the trading band to trade in for that 8-hour period. So a limit up basically works. Say that the price is $10 at the start of an 8-hour trading session. You will not be able to submit a buy order above 12 or a sell order below 8 during those 8 hours. And at the end of the 8 hours, the base price resets to the last price observed at the end of the previous trading session. And what this allows for is a cooling off period in very volatile times, so that if there's wild trading going on, that market makers or other traders can come in and see these prices like, oh, I don't think that's rational, or whatever trading strategy that they're using, and they can go in and trade the opposite direction. And because we use an automatic margining system, this also helps reduce the risk of cascading margin calls and some of the sort of things that we've seen on exchanges like Bitfinex and BTCE earlier this summer.
Yeah, and that was kind of my, I understand the volatility component, but then going forward from the risk assessment standpoint, if the futures product would act in a way that I would like to trade, so it's still going to be probably a learning process on the platform. But Adam and I were discussing, and maybe Adam wants to weigh in a little bit, as far as what he's looking for in the futures product, and if that's a viable model with limit up, limit down. Because I understand that you guys have taken a different approach to managing risk than some of the other futures products out there. Adam, do you have anything to add?
Not this time. The one thing that maybe a little off topic that I was thinking about is, are y'all thinking about doing maybe an easy way to do structured products? Or I know in volatility land and the futures curve, it's good to calendar spreads can be very effective. So I mean, are y'all thinking about maybe you get some kind of algo kind of thing that might make execution of some more of the complex structures more convenient?
So right now we actually do have calendar spreads listed for all of our Bitcoin US dollar futures contracts.
Okay.
So you can trade between the different maturities with one synthetic instrument. So exchange engine technology can support any sort of synthetic structures. So say like a straddle or a strangle or any option strategies, we could actually have that have its own order book and decompose into the underlying legs straight to your order book, depending on demand for this sort of synthetic instrument and liquidity in the outright derivative products.
Super cool, super cool. That's exactly the kind of thing we were looking for.
And then just coming back to the specifically to the vol product, and this is one thing that I've really thought about in the last 24 hours, because I think the Bitcoin trading community, especially what I consider like our active retail community, has an extreme appetite for risk, and I think that's actually what's drawing in. Leverage is one component to an exchange setting themselves apart. What kind of leverage are you planning on offering on this BVOL product?
So right now the maximum leverage is 5x. Because this is such a new product to the Bitcoin ecosystem, we're being very conservative with the amount of leverage we offer. I've looked at the statistics and the volatility of the volatility, and we're being very conservative with maximum 5x. But I want to see how this contract trades and the trading behavior before we go out there and we make this a super leveraged product and put ourselves at the exchange and our promise of central clearing at risk. So because it's new, it's just not prudent for us to go in with super high leverage product before there's any sort of historical data as to how it'll trade.
Okay, yeah, that's a very huge point there, that we're in such uncharted territory with Bitcoin, and to put a volatility product on it, I do understand that take baby steps before we decide to do the full Monty on it. But Flibber, do you have some stuff up that you wanted to discuss there?
Yeah, hi Sam and Arthur. Listen, this socialized losses versus the limit up, limit down. Still not sure how that works myself, to be honest. But I put a feeler out on Reddit and said, look, what do people think about this? And the first thing that came back was, look, so they're gonna prevent manipulation by manipulating themselves. And I was like, you know what? That's what I think as well, because you're not going to allow the order book to go completely wild. You're going to be controlling it on your end of the system. And are people comfortable with that? I don't know. But, what do you say to those kind of accusations of saying, you are basically going to be controlling price and controlling the range of price and everything about that? Where does that come in?
Well, at the end of the day, if the futures contract is not settled to spot, then we have not done our job as the exchange, and we've defaulted on the contractual obligations of a futures contract. So that will always be the case, that futures will expire to the spot on expiry day. The interim, because we are taking a centrally clearing stance, we have put certain speed blocks into the market. We're not manipulating the market. It just might take longer. Instead of the market gapping a certain percentage, if the market wants to gap that over the course of 24 hours, it can do that. But from my experience as a trader, nothing goes in a straight line, either up or down. And having a speed bump or cooling off period is actually safer for the exchange and traders as well. But this is a free market, so if you want a centrally cleared method of counterparty risk, then these are the sort of things that you'll have to accept to trade on this sort of exchange. Whereas with the socialized loss parimutuel style betting system, yes, the market can go crazy, but if you thought you made 20 but it actually comes back as 10, then that's just par for the course in the type of trading instrument that you've chosen.
Okay, well, what you've come on into there is the counterparty risk via a centrally cleared site, and this is like Bitfinex. We know they incurred losses during a big sell-off or whatever before. We don't know how much those losses were. We don't know whether they've recovered now. We don't know anything about that, and so there's an element of transparency there. I personally prefer the socialized losses because it's clear, it's open, it's transparent. So we've had doxing, we've had stamping. We're talking about centrally cleared leverage risk, why should I trust your centrally cleared system versus an algorithmic, clear same style every week? Why should I trust your centrally cleared system at all?
You're still trusting the Chinese exchanges or whoever's offering the socialized losses because they just tell you a number at the end of the week. You're not sitting with the CTO looking at the books, seeing where the margin calls happen, what price did they actually get out at. So you're taking the same blind trust in those exchanges that you'd be taking with any exchange that you place your money with. So your risk of this transparency is an illusion. You have no transparency. It's the same risk.
Okay,
it's just in a different way.
Okay. Yeah, that's true. But why should I trust you guys? What have you got in place? I mean, yes, you said the limit.
Yeah. I just wanted to add to that. On top of what Arthur said, it actually takes quite a bit of trust to accept the socialized losses proposition. We believe that we are being fully transparent on what the rules are and how the market operates and how it's cleared, and where the price is at settlement is how you're going to be paid out. Full stop. What makes that really different is in a socialized losses environment, not only are you accepting some variable amount of loss, depending on the volatility, depending on how liquidations were handled and how well they were handled and what the market was like, you're also trusting them to be honest with what those numbers were in the first place. And there's no guarantee of that at all. Basically, they say they've lost X amount and they need to claw it back from those accounts. I'm not saying that anybody's lying. I have no idea, but blind trust. You have no insights into what actually happened. You have no insights into what their books look like. So you have to trust them much more than you have to trust us, because you're trusting them to be honest about those end of the month numbers.
Yeah, I think this is certainly one of those very hot button debates that's going on in the community as a whole right now. And I mean, I will say that I'm happy that there are different approaches out there versus, there's your startup, there's other startup exchanges that are doing it a totally different way. And as a trader, I'm glad that I have those choices, unlike a very constricted market like the listed space goes. But the way I would counter a little bit to your point about the socialized losses is we have now 3 exchanges that do it. So there's some gauge as to if those three parties are engaging in a socialized loss system, and to see how it kind of crosses that space and how much loss is being incurred. It's not always equal, but you kind of get a gauging of, okay, there was a crazy volatile move, there are losses, it's being hit by this amount, this percentage. But you are correct. In the end, it's really up to the data they report. And as well as now back to the central clearing party, it comes upon you for us to trust you about those losses, because they could be making up what they're losing or not losing, just the same. It probably gives me as a trader a little bit more peace of mind, thinking I know where the losses are coming from, versus a counterparty, which, maybe if they admit they have a loss, I don't know to what extent. And the bigger concern for me is, at what point does that become a systemic risk? If the exchange isn't mitigating that risk properly, I could have 5-6 weeks of no clawbacks or no socialized losses because the counterparty standing behind that. But does on week 6 is it a systemic event where the exchange goes away and takes everything with me? Because I think that's a real development of trust that's going on. And I have no right or wrong answer as to where I think it's going, but it's interesting to see it play out.
Yeah, there's no such thing as a risk-free trade, no matter what anyone will tell anyone. If you have any form of wealth on any sort of exchange, you have an IOU with that exchange, and it's up to each trader to make their assessment of the risk by speaking to the owners or looking at their past behavior, and seeing, do I want to place my money with this organization? And so we hope to demonstrate through a track record of honesty and transparency and doing what we say we're going to do, that hopefully that more people will trust that we're not going to run away with their coins, and our risk management systems are are sound and the policies that we have in place are in place to protect us and protect traders, and ultimately their funds and their possible profits trading our products.
So on that same line of thought, then, can you first take us through like the financial backing that you have that would instill that trust? And then probably more of a question for Sam, as far as the technical security measures you guys have put in place. And we're all familiar with the ever abundance of exchanges that go through that issue. Probably Bitstamp going on right now.
Yeah, sure. So we're currently a privately funded organization. We're looking for a capital raise at the moment. I'd say that if you look at the open interest on the exchange compared to our competitors, it's not very large. And the chance of us losing everyone's money is very, very, very remote because we're not trading that much yet. And because our fees are a little bit higher than the rest of the competition, procyclically, as our volume grows, the amount of money that we have in reserve, in the case of a credit event or our margining system not covering a particular trader, that cushion grows as well. So as we grow, we become a safer exchange. I guess Sam can move into more of how we handle customer funds and the sort of safeguards we have in place to make sure that our derivatives environment does not go out of the sum zero sort of situation.
Yeah, absolutely. So I don't know whether or not we're the first exchange to do this, but we are in the minority of exchanges that are fully multi-sig. So you'll notice when you sign up for for a BitMEX account and you view your deposit address, it starts with a 3. Every address starts with a 3. They're all multi-sig. They're all pay-to-script hash addresses. Every single wallet that we handle is multi-sig. None of them are hot. At the moment, that leads to a little extra time that it takes in processing withdrawals because we handle them and review them by hand. But it does lend a much higher degree of safety. None of our automated systems have any of the keys. There's no eventuality, even in the case of a complete compromise, that any of the money would be taken. On top of that, we have a comprehensive audit system both in the API and in the trading engine that does a large number of asserts on the general state of the system. So it's constantly adding up and tallying the tables and making sure that everything sums to 0. And if it doesn't at any time, and that could be just a little bit of money missing from an account, that could be a trade that doesn't quite add up right, that could be all kinds of things, it shuts down immediately. Emails everybody in the team, we handle it, that sort of thing. But trading stops, full stop, at any sort of inconsistency in the system. To date, we've never had that happen, but we've tested it thoroughly. We tested it during our trading games earlier, and we test it on a regular basis on our development machines, and it works.
So you would actually halt the market at that point?
Yeah.
Okay.
Yeah.
I'm trying to envision. Obviously, you're doing it to protect some issue that's going on that you think may have happened, right?
Yeah, it's very similar to honestly what went on today with Bitstamp. If there were a compromise of some sort and things stop making sense, trades stop making sense, things don't add up anymore, rather than allow the problem to perpetuate at the very first instance of there being a problem, the exchange is stopped so that the problem can be rooted out from its core.
Yeah, that's a fair way of describing the process. It's just it tends to always incur panic and rampant speculation immediately. I just think if you can make sure to get ahead of the curve on communication, that can be the biggest benefit to any exchange. I mean, just going on the current events of Bitstamp, it's taken, I don't know if they've come out, I've been sleeping, so I don't know if they've come out with anything, but that communication is huge, and not just that the exchange has been halted. Now that you've described that to me, makes a lot more sense. And as well as pivoting on those security measures, what's the process for withdrawals? I know some people are very accustomed, and they've gotten into this thing where they want the instant withdrawals, they want things going quickly. What's your withdrawal process?
Right now, it's not that quick. We generally process them once a day, sometimes twice a day if there's larger volumes. Some people don't like this, totally understand. It's sort of a trade-off between convenience and security. We're working on a sorry, excuse me. We're working on a hot wallet system that'll speed that up for withdrawals that are below a certain threshold, and that's again a risk management practice, and we're still working out what the exact numbers will be, but basically to provide maximum convenience and security on a sort of a sliding scale.
All right, and then Flipper, I know you were testing out their platform earlier. What have you done through your stress test? What have you seen as far as UI, liquidity, and such?
Yeah, I mean, I basically found it, like there's just a lot of text about all kinds of, like, the margin system. I thought was so complicated, all this different stuff, coming from a simple cotton mill worker background. I didn't understand all this. I never got an education, you see, so I didn't understand everything on the site. And I'm thinking, is it? And I don't know if other users are going to struggle or if it's just me, but what is the target market of the site here? Is it, because I noticed you did a blog post about how merchants can use your site and the futures contracts to offset risk when engaging in transactions and stuff. And I'm thinking, and I know you come from a professional, institutional kind of background setting, so and the site is geared as like the professional one, and it's sure complicated the hell out of me. It made me run away. So I mean, what is the target market there? And for people who maybe just come from a simple background like myself, what do you, how do you make it easier for me, and what are you going to do?
Well, I think part of our corporate philosophy is to provide all the information that you need to properly make a decision as to whether or not you want to trade this product. Now, that requires a level of detail that some of our competitors don't provide. And I think that a lot of people in Bitcoin land are trading products that they really don't understand. And right now, the market's not moving really that much. So if Bitcoin's really going to take off and do the things that people say it's going to do, and the volatility picks back up to where it was in November of last year, a lot of people are going to be scratching their heads why these seemingly simple products are not performing the way that they thought they would. And then they're going to have to go back into the fine print that the exchanges are giving them and understand exactly what's going on. Why are they getting margin called? What are these numbers? When I go through other exchanges and I look for, okay, how does this contract perform under these circumstances? I'm clicking all over the place. I can't really find out all the information. And what we want to provide is, here's a contract specification table. It tells you exactly how this contract performs under these circumstances. Here's our margin policy. We spell everything out, every number, every definition of every term, so that if you have a question, you can actually look and see. It's not, oh, what are they trying to do, trying to figure everything out, and a bunch of emails back and forth, and maybe customer support doesn't understand what you're trying to say. If you come on and you're a serious trader, then you need to do some learning about the things that you're trading about. Otherwise, you're going to lose a lot of money at some point because of something that you really didn't understand. And I've seen it at the bank more than anywhere, where the fine print on some product and you go and lose millions of dollars because you didn't take the extra 15-20 minutes to figure out what exactly was going on. And so I do understand your concern that there's a lot of verboseness in what we're putting out there, but for someone who's serious about trading Bitcoin derivatives, something that's one of the most volatile instruments in the world, and adding on top of that leverage and nonlinear payouts, you just need to be a little bit more, we have to provide more detail than I think some other players are providing.
So basically what you're saying is this is the way the banks and the institutions do it, and we're just going to keep it this way, and you'll have to adjust, basically.
I wouldn't even say that the bank's institutions do that. I'm saying that they don't do this in a lot of senses, that you don't know what you're trading. And so we're trying to be completely transparent. You know, go on one of your, go on like a CFD broker like IG Markets or some of these guys and start trading there, and you'll see, you know, why isn't this performing like it's supposed to perform? And you have to go read through the fine print. Like, we're trying to put everything right in front of you, be completely clear about exactly the product, how it performs, how do we calculate margin, how do we margin call you, under what circumstances do you get, you know, a profit, under what circumstances do you get a loss, and trying to be completely clear. And I don't think that very many, either in the traditional finance world or even in Bitcoin land, are properly educating the people trading their products.
I totally concur with that assessment of what's going on. I'd like to say that you know, us active retail, kind of our community, you know, we're just really a bunch of degenerate gamblers. So we usually trade product first, then ask questions second. It would probably be best that all members of the trading community go through the process of educating themselves on the product. But from, you know, maybe a capture of the market perspective, I think for better or worse, having a simpler interface, which people can get on and start trading immediately, and then you know, do the education part second, is maybe more conducive to drawing more business to your exchange than to have it all up front and kind of require them to go through the process. I'm not saying it's right way or the wrong way. You know, people need to gauge that. I think it's great that you guys are disclosing all of those things, and that it becomes an educational process, and it hopefully better traders and knowing what product it is that they're trading. But I think there might need to be balance struck there to some extent.
I think Sam has something to say.
Yeah, I just wanted to mention where we're going in the direction with the UI is simplicity sometimes goes by the wayside. We understand that. What we want to provide is a trading platform that gives you power, that gives you all of the information that you need in front of you at your fingertips, so you can see everything that's going on in the market. You can see everything that's going on with your positions. Not only can you see your current margin balance, but unlike other sites, you can see exactly all of the components that make up your margin balance and what parts of it are being taken up in different things, you know, open positions, maintenance margin, excess margin, session margin, all that sort of thing. Yeah, it takes some more education to use. Flipper, I can't get screen sharing to work for whatever reason. Can you open that link in chat if you get a chance?
I can do it too here. See if he might beat me there.
Oh, just some of you guys might not know, but we run a fully functioning testnet platform that runs alongside BitMEX. It's exactly the same in every way. It generally gets updates faster, of course, and it runs entirely on testnet Bitcoin. But it's great for testing out trading strategies, trying out new products to see how they'll perform. You can manipulate the market probably because it's all testnet Bitcoin and you can get lots of it. Lots of people use it for testing out bots. It's just a risk-free environment that performs in exactly the same way as the live environment. Not a lot of exchanges have this. In fact, I don't know of any that have this. What I wanted to demonstrate there, and obviously Flipper, you don't have an account, but you can kind of try it out a little bit. We got a request from a bunch of users that they want to customize more. They like having everything in front of them, but they want to really customize their experience with BitMEX. Yeah, sorry, Flipper, it's a separate account, actually. You have to register again. It's a completely isolated environment from production. But we now offer the ability to mix and match all the widgets on the site. This is only in testnet right now, but you can drag any of those ones on the bottom around. You can resize them. You can put them in the orientation that you want them to be in. You're not in the trading view right now, but if you're in the actual trading view, that allows you to get everything exactly where you want it. That means, you know, your positions in the corner, your order box, you know, your chart exactly how you want it. We use the trading view chart, so you can draw on it, you can do technical analysis, all that sort of thing, so that you basically never have to leave that view. Everything's right there. Yeah, it's not simple, but it's powerful, and it's getting better in terms of simplicity. We listen to newbies a lot, and I'm always trying to make it easier to approach.
Hey, KAzanomics just stepped on, but I'm sure he's just getting kind of thrown into the fire as far as probably getting caught up on what we're talking about here and the BVOL product. Have you guys have been in communication with CryptoWatch as far as getting that historical volatility futures contract BVOL listed on there? What's the status on that? I know you guys have only been live for 6 hours on the on that market, but what you've been working with Arthur over there?
Yeah, Artur.
Artur, sorry.
Yeah, we've been emailing back and forth. They're in the middle of, I believe, a bit of work on their end, so it may be a while, but we have implemented the Bitcoin charts API. They have kind of a standard for how information's passed if you want to be listed on their site, as well as the TradingView API, so they could hook into either one of those. But it's been a little bit of back and forth. Listing a futures exchange could be kind of complex because you have instruments that are created and settled and expired and so forth, and they roll over. So it's not quite like listing spot prices, you know what I mean? But obviously other exchanges, OKCoin, et cetera, they do it. So we're close.
Yeah, I think that would be a big move for just credibility and people being curious about the product. I do see you guys have a chart page there. Flipper and I have discussed it before as going forward, how your platform would look with the chart page there or not there. I think many people in the Bitcoin community have just gotten accustomed to going one place for charts, one place for trading interface. What's your thought process on that? I mean, granted, the CryptoWatch integration would be a big move just for getting the exchange name out there and such.
Yeah, I totally understand. We've put out feelers with all the major charting providers right now. Some move more quickly than others. Some have various requirements, but it's all in motion. I would expect to see listing happen soon, within the next month or so. But it's the same reason we do the TradingView charts on the site. We understand people have all sorts of things they like to do, and we wanted to provide, at least on site, the most powerful platform for doing that.
All right, and then Flipper, I know you put together a little bit of a list. Do you have a couple things that you wanted to go over?
Yeah, I do. These are really important because I set up an account. I'll go move some coins over me. I'll probably do the testnet now. I've got some testnet coins. But liquidity, I mean, I noticed the difference between the spread and ask was really quite large, and not seeing many trades on there. I mean, it's like a chicken and egg thing, isn't it? How do you get traders on there with no volume? So what's happening with the current status of liquidity right now, and how does that work?
All right, so right now we have one large anchor market maker. They're probably one of the largest Bitcoin traders globally, professional firm who trades Bitcoin. They provide markets about 16 hours a day during the week, and if you go on now, you'll probably see them on some of the markets. Where we've been lacking is getting more of the smaller size traders to come on and put a couple coins and make a spread, or try to scalp a bit on the market. And so what we're going to do is to incentivize these traders is we're going to implement basically a more automatic way of rewarding market makers. So you'll basically be able to be rewarded on the tightness of the spread, how much size you quote, and how much time you're quoting on the site in real time. And in real time, we'll be able to give you a discount. So it'll be a very completely flexible program, so that you can quote to the size of the capital that you're willing to put up. It'll be less rigid than what we've been doing in the past, with more traditional. Here's an agreement. Here are the different buckets that you need to make to get this discount. We recognize that for the Bitcoin landscape, that's just too rigid. That people want to have the complete flexibility to quote when they want to quote and however much they want to quote. So basically, we'll be implementing that tech to make that completely automated within the next month, and that's a high priority for us. We recognize that liquidity is the number one thing. We can have the most beautiful API and an awesome tech in the world, but if no one's trading, it's irrelevant. So I totally echo your concerns, and that's our number one priority at the moment.
Exactly, yeah, I agree. The other thing I want to speak about was bots, because there's a few people in our team speak which use bots for like arbitraging between different futures contracts and all this kind of stuff. How bot friendly are you guys? I mean, is there any kind of restrictions, anything like that?
Sam, you want to speak to that?
Yeah. Aside from standard rate limiting, so if you hammer the hell out of the server, you're going to get banned for a while. No, we're extremely open to it. We have a lot of reference API clients on our GitHub, linked in the API documentation. We have real-time data coming out of WebSockets. We have a comprehensive API, I guess is what I'll say. And everything that the BitMEX UI does, every piece of data that it accesses, and every single operation that it can do, happens through the API, and all of those API methods are visible via our interactive API Explorer, which you can see on our main page. So you can do everything. You can even automate creating accounts, getting deposit addresses, et cetera, et cetera, et cetera. It's all automatable. We have a market maker that is free to use. I suggest you modify it because it's not the smartest thing in the world, but it demonstrates how to communicate with the system. And we're seeing a lot of traction on that, especially on the testnet. We see kind of the craziest things come through our APIs. People try things out and eventually roll them over to production.
Yeah, I can imagine. Well, that's good to hear. And the other thing I wanted to cover, which is really important, is that we covered the BTC withdrawals and that it's going through this slow process, but you're in the process of putting some kind of hot wallet-based system in to get that all going. Now, what about fiat withdrawals? What currencies? Who are you banking with? How long do they take? And what is the process for that? Because that's important too. If people are... Go on.
Oh no, so right now we are completely a Bitcoin exchange. So as you see, every product that we offer is you have to deposit Bitcoin, and you make a profit or loss in Bitcoin, sort of like 796 and some of the other exchanges. For fiat to Bitcoin, we're never going to do spot. We're not a spot exchange. We're completely derivatives. What we will offer in the future is fiat margin derivatives. So deposit your US dollars, make a bet on the US dollar Bitcoin price, and instead of making Bitcoin in your profit or loss, you make US dollars. So I don't know if you've seen, we partner with Vigogo out of Canada, a leading payment provider, and they have a gateway for US dollar and Canadian dollar. That's on our list of development to get that functionality into the exchange. But the big thing that we are very cognizant of is the legal ramifications of offering a US dollar or fiat margin derivative contract. Because once you move away from Bitcoin only, now you move into the realm of CFDs and all these legacy regulations that are very expensive, and we have to be very smart about how we structure contracts. So we're speaking with our lawyers, and when we have a proper structure in place to offer these fiat contracts that's not going to saddle us with extra regulatory burdens, then we'll offer them. And that's probably why you haven't seen a US dollar futures contract yet, because everyone knows once you start touching USD or any euros or some of these currencies, then you start falling under the jurisdiction of CFTC, SFC, CBRC in China. So they'll come after you. So you really have to be careful when you start touching the fiat.
Okay, great. I've seen on the site you offer these two contracts. 90% of people out there, I'm sure, will be just as confused as I was. You've got, what is it, Quango, Tango, Inverse? Yeah, what are they? Because I don't want a full breakdown, but am I right in thinking one is trading a contract with a USD base and one is trading it with like a Bitcoin base? Is it like I win Bitcoin on one? It's like a game, isn't it? I win Bitcoin on one, I win USD on the other, or is that completely wrong?
Kind of almost there. So So there's two in the Bitcoin landscape. There's two types of futures contracts. The first one is what we call a quanto futures contract. So you are quoting on the Bitcoin US dollar exchange rate, and you're quoting it in US dollars, but your multiplier, i.e., what you make or lose, is in Bitcoin. And so we offer that. That's the XBT chain contract. So the first three letters will be XBT. 796, they also offer this sort of contract. For someone who has Bitcoin and who wants to make a bet long or short and earn Bitcoin back, this is the appropriate contract. If you are going long, if you want to bet that the price is rising, you should be buying this contract because as the price rises, you make Bitcoin, and those Bitcoin are worth more in US dollars. So it's a double effect. So you make money in two ways with this chain of contracts. Now, on the other side, you have the BitVC and OKCoin and our XBU series. The first three characters are XBU, which is worth a fixed $100 US of Bitcoin. So at any time, that amount of Bitcoin that equals $100, that's what the contract is worth. So if you look at the math, it makes sense that you should, if you're locking in a dollar value of Bitcoin on the short side, you should trade this contract because as the price falls to zero, you make an infinite amount of Bitcoin. But as the price goes to infinity, you can only double your money. You can only go up 100%. So these are the two style of contracts, and you'll start to see differences in price between a weekly contract, say that you guys are familiar with on 796, and a weekly contract on OKCoin. They should not trade at the same price, even if they expired on the same day, because of these effects. And as the sophistication in the market grows and the volatility picks up in Bitcoin, you'll find out that you should be short contracts that are worth a fixed amount of US dollars, and long contracts that pay you a Bitcoin multiplier on a US dollar price. Right now, you might see the contracts traded a similar price because the market's not that volatile, but when the volatility picks up, people will lose money because they don't understand the difference between these contracts. It is not a straight arbitrage.
Are you good, Flipper?
Yeah, I'm good. Thank you for that.
And KAzanomics just came on. He always offers a very interesting perspective. I don't know if he's completely caught up on what you guys are doing, but I'll bring him in now, and if he has some things to say as far as a tradable product.
Hey man, I'm halfway distracted. I'm like in the middle of trading this oil disaster. Hang on, I might need to exit real quick. What I was going to say about the Bitcoin Volatility Index was it's based on historical volatility. The VIX of the S&P 500 is based on implied volatility, which is vastly different than historic. I don't know if you guys are trying to use that index in the way the VIX is used for stocks, but it's quite different.
Yeah. Okay, go ahead.
You guys understand the difference between the historic and implied?
No, 100%. Yeah, we know the VIX is a chain of option implied volatilities, from the S&P chain. This is, the standard deviation annualized for historic. We know that they're completely different in terms of how they behave, how they're constructed. There's no decay in our volatility futures contract. We're not trying to present it as a VIX. It's because there's no options to take this implied vol out of. So this is a pure punt on. I think volatility will realize at this point in the future, kind of thing.
Can I just add something on that volatility index, Arthur? If I say we have a 6-hour Bollinger Band squeeze or a 2-hour Bollinger Band squeeze, and I know shit's about to get real, right? So I want to go long on volatility. I think volatility is going to go crazy. Can I do that? Am I right in thinking that's how it works for the lay people out there?
Right. Yeah. So if you think the market events are going to pick up, yes, you can go long volatility. But just as a caution, this is over a 30-day time span. So even though the market might tank 5% in the next 2 minutes, the amount of effect that will have on the actual index expiring in 30 days will not be as great as you might think. So the move might not be as pronounced. But if, say that you you predict correctly that if the market's at a 40% volatility level, and China does some crazy shit, and the price starts going crazy for the next 3 months, like we've been seeing, and volatility triples, you're standing to make a good amount of money in that respect. So it's a little bit longer time horizon than maybe Bollinger Bands or some of these other technical analysis indicators that you guys use to trade.
Why is it so slow? Why can't it be really fast moving? Because if something's really slow, I mean,
Because that's the
isn't
difference
it more
between
fun?
That's the difference between historic and implied. Historic is aggregating a period. Implied is future expectations of volatility. It's two totally different things.
Why can't we aggregate the last hour?
Well, I was thinking more on like a weekly basis, taking data points off of like a 2 or 4 hour observation point.
If it's going to be a hedge against the volatility that we're experiencing in this market, it can't be across 30 days. That's almost useless.
I mean, this is the first product of any volatility aspect of any Bitcoin exchange. So obviously we're listening to what people want and have feedback, and we'll see how this trades and make the adjustments.
Look at the quarterlies and just look at the consolidation periods and the explosion periods, and that's pretty much the average range of what everyone needs in the market at 20x. At 20x, that thing is consolidating for a day or two and then blowing people's accounts apart, with 20-point spikes as it margin calls people, and then it settles down and does it again later. So 30-day, when you got weekly contracts, it just doesn't suit the marketplace.
Yeah, sorry, Arthur, I'm kind of stepping probably in front of you, but I just want to echo that extensively because for me, I understand you guys this is probably your first rollout. Hopefully, personally, I wanted to see it move that direction because a very active trader like myself, we need a product that's going to reflect those huge underlying moves that Kaz is talking about. So, kind of thoughts on that?
The thing has been listed for 6 hours. We're obviously taking feedback from you guys and other traders as well. So, if we can find the liquidity and the consensus among traders, and that requires us to change the duration of the volatility futures contract, we'll do that. But I think we're going to go with this for a little bit to see how the market plays out.
Did I say that us traders are extremely demanding and we wanted everything yesterday? So yeah, that's kind of the way it's the way we're going to come off as is, hey, why didn't you do this already? But yeah, go ahead, Flip.
It's okay. I mean, I just thought, we've covered that. I just want to move on to something else equally important to users who might be using the site. Have we finished that, or?
I just wanted to say one last thing, and just from again the active trader community is like Kaz is echoing. We need those fast products, and for me to come over to your exchange, I'm gonna need to see that, and to capture market share, to have us on chat and want to be talking about your product and trading your product. That's where I believe it needs to go. It's just my opinion. And that's what I'll close with.
Okay, well, just to add to that, I mean, I did tell Arthur to get it listed on CryptoWatch. Have you guys been in touch at all?
Yeah, Sam spoke about that a couple minutes ago. Yeah, we're in touch with them and getting that together.
Okay, just a side note, I'm looking at the volume on the weeklies and the volume on the quarterlies, and the volume on the weeklies is about triple what's on the quarterlies. So I'd say if you're looking for the demand and volume to trade your product, that the people needing to hedge, you'd have 3 times as many of them in the weeklies as you would in the quarterlies. So that would be your first indication of liquidity.
Okay. Well, yeah, the other thing I wanted to add on, really important to users, is support. Now, I know both of you are on TeamSpeak. I know you've got the chat box on the site. Who else is there working on support? Is there a telephone number? That's about support.
Yeah, so there's Sam, you want to handle that? Or?
Yeah, sure. I'll chime in. There's always somebody around. We're in disparate time zones. We have a couple other people working for us. We have another co-founder who's not public at this time who handles some things. We generally respond to support requests within an hour, oftentimes a lot faster than that. You can reach any of us by email very quickly, in the troll box very quickly. We have automated notification systems hooked into all sorts of things that ping us whenever messages come through. So we want it to be a differentiator for us in terms of our responsiveness. So we think, I mean, we're holding your money. People get edgy. We completely understand that.
Exactly. That's what it's all about. For me, when I move to an exchange, I'm looking for trust, accountability, transparency. I mean, I've seen the stuff you put on Reddit. You know, it's ticking boxes for me there. I mean, what about publishing cold wallet addresses? Because I know that's something 796 do. We spoke to OKCoin about it. What are your thoughts on that?
Yeah, I've been working, actually, it's in my list, and I have some code written on a proof of holding systems, proof of liability system. The whole thing with the the whole Merkle tree system that a couple of exchanges are implementing. It's something we're going to do. There's just a significant amount of development time that goes behind that. As for publishing cold wallet addresses, we generally actually don't move the money around that much because we're using BIP38 addresses. There's not really any need to coalesce into a single address. So if we were to publish that, it would actually reveal a lot of information about our users. So we're not doing it that way yet. But the proof of liability system, I can't say when it'll be out, but it's something we're working on to provide that assurance.
That's good to hear. Thanks.
And then, just off that, as we start to wind it down here for the live segment, what other new products do you guys, not necessarily are you working on, but you envision? We talk a lot about options here, and if you're a derivative-centric platform, clearly that's got to be at the forefront of your mind. What do you think of an options market in Bitcoin? Is Bitcoin ready for that? Have we matured to the point where we could actually see an options market function and get the liquidity that is needed to support that?
I don't think the market's ready for options yet. Judging by the response to, going on a platform and having to understand the futures contracts, when you start moving to options contracts, the amount of information you need to display is, 10 times as much. There's so many other variables you're trading. And one of the first things is we want to list options on our own futures contracts. So obviously we need to focus on getting the liquidity, higher in our underlying futures contracts. Secondly, we are in the process of implementing span margining. So it's standardized portfolio analysis of risk, and basically that allows us to margin in the money, out of the money, long expiry. So we're not basically going to make everyone have to post 100% delta on their options portfolio, which makes you can't trade the vast wings on the strikes very effectively as a market maker. So we need to do a significant amount of work on making our margin system even more friendly to market makers, and I think that's going to be at least a 6 to 9 month sort of slog to get that sort of stuff in place for the options market, because the risk if we want to centrally clear options on BitMEX, the risks multiply so much higher. So we need to be that much more vigilant in how we do things.
Yeah. I just wanted to now, as we reach the final state of this hangout, just take a walk down the panel and see if they have any last questions for you guys. So I'll start on my end. Adam, do you have anything that you want to ask BitMEX that we haven't covered that's been burning your mind?
No, man, y'all covered a lot. Thanks a ton for doing this. I would love to schedule another one at some point because I'm going to get on the platform and actually mess around with it. I think I'll have more to come with next time.
Okay, and then, so Nell's probably sitting in the background, so we won't cover him. Kaz, do you have anything last to add here?
No, I'm good on that.
Okay, thanks for coming on, Kaz. I appreciate it. Nick, I know you just stepped on. If you've been listening, is there anything that's been burning in your head that you wanted to ask BitMEX? Okay, I'll take that as a no. So then I'll throw it over to Flibber for any closing remarks.
I put it on Reddit. Has anybody got any questions? And one come through. It says, are you concerned about the amount of extra fake news, fake outs, and general lies when people try to manipulate even more now? Now you can make 2x with manipulation, make BTC remote exchanges, and also make BitMEX Volatility Index. As a side note, I wonder if this will give more media attention. I think the general question is, what do you think about basically just fake news, all that stuff, and people just trying to rinse traders on the exchange?
Well, I mean, it's up to the trader to interpret the news, how they interpret it. So, I mean, there's nothing that you can. People lie in every financial market globally, so I don't think for Bitcoin it's any different. Common sense still prevails, but fear and greed usually drive the market.
Yeah.
Nice.
And just to close it out here, Arthur and Sam, do you have any last words? First, Arthur.
Yeah, I guess thanks for having us on here. It's great to hear a segment of the market and how they're perceiving what we're offering. We definitely are listening to everything you guys are saying and want to make this an exchange where you guys feel comfortable trading the style that you want to trade in. And apart from the futures contracts and sort of, we have some cool stuff that'll be coming out that we'll speak more on at a later date. But yeah, so thanks for having us, Sam.
Yeah, just wanted to echo that. It's been a lot of fun. We really like coming on here, really like asking questions about the platform. We love what we do. We're very passionate about it, and we're always happy to talk about it. If anybody out there is thinking about writing bots or interfacing with their API or has questions, suggestions, comments about the UI, API, interfacing with BitMEX, all that sort of stuff, just drop me a line. I'm Sam at bitmex.com. A lot of our code is a lot of our interfacing code is open source. There's a lot that can go on with that, but if you need kind of a guide to getting started, I'm here. And that's it.
Yeah, and you just gave out your Twitter, and then it's at BitMEX Exchange, right? For the Twitter handle.
At BitMEX.com.
Oh yeah, okay. .com. There we go. Yeah, and I just wanted to echo that. It's very important as active retail that we can engage people right at the exchange level. I've found that I've been the most comfortable trading at those platforms. I feel like whether it's just a artificial feeling or a real feeling that we are making a difference and to see the products that we want as retail traders. So that's why there's a tremendous amount of value in that interaction. I know you guys hang out on TeamSpeak, which is really awesome. I'll post the instructions for TeamSpeak and the channel designator in the show notes. So on that, I just want to say thanks for everyone coming on, and have a good day.